Very good morning to you all. Today we'll start a new topic. This topic is called Accounting for Petroleum Industry. Also we can say Accounting for Oil and Gas Industry. Part 1. An introduction to the petroleum industry. At the beginning, we need to know some terminologies related to petroleum accounting. To apply accounting on petroleum industry, we need firstly to know some terminologies related to the petroleum industry. Some basic terms and concepts. Basic terms and concepts. First of all, we need to know what is petroleum. Petroleum refers to crude oil and natural gas, or simply oil and gas. The first term is called petroleum. Petroleum refers to crude oil and natural gas, or simply we can say oil and gas rather than petroleum. Petroleum reservoir. Reservoir is a French word. Are generally thousands of feet below the surface. And we need to differentiate between reservoir and reserve. There is a difference between reservoir and reserve. So we mentioned here two new terms, petroleum and petroleum reservoir. Oil and gas are discovered and produced through wells drilled down to the reservoirs. So, oil and gas are discovered and produced through wells drilled down to the reservoirs. We have two kinds of wells: exploration well and development well. Exploration well is one drilled to discover petroleum reservoir, and a development well is one drilled to produce a portion of previously discovered oil and gas. So we need to know that we have two kinds of wells: exploration well, which is drilled to discover petroleum reservoir. On the other hand, development well is one drilled to produce a portion of previously discovered oil and gas. Estimated volumes of recoverable oil and gas within the petroleum reservoir are called oil and gas reserve. Here we need to mention that there is a difference between reservoir and reserve. Estimated volumes to recoverable oil and gas within the petroleum reservoir are called oil and gas reserve. After we did mention some new terminologies related to petroleum industry, we will start the second point here, segments of the petroleum industry. Segments of the petroleum industry. The petroleum industry, commonly referred to as the oil and gas industry, has four major segments. Petroleum industry has four major segments. The first segment is called exploration and production, and its abbreviation E&B. Exploration and production, by which petroleum companies referred to as oil and gas companies or simply oil companies. So we can say petroleum company, oil and gas company, or oil company, which explore 4 underground reservoirs of oil and gas and explore and produce the discovered oil and gas using drilled wells, through which the reservoirs oil, gas and water are brought to the surface and separated. So, petroleum companies, one of their segments is called exploration and production. Explore for underground reservoir of oil and gas and produce the discovered oil and gas using drilled wells, through which the reservoirs oil, gas and water are brought to the surface and separated. The second segment is called hydrocarbon processing. Hydrocarbon processing, by this segment, crude oil, refinery, and gas processing plants separate and process the hydrocarbon and the gases into various marketable products. Refined products may be processed further in petrochemical plants for making petrochemicals. So, the second segment is called hydrocarbon processing. Here, the petroleum company refine crude oil, and the gas processing plants separate and process the hydrocarbon and the gases into various marketable products, and these products can be processed further in what is called petrochemical plants for making petrochemicals. Transportation, distribution, and storage, by which petroleum is moved from the producing well areas to the crude oil refinery and the gas processing plants. يبقى البتروليوم is moved from the producing well areas to the processing plants. Refinery and processing plants. Crude oil is moved by pipeline or tanker. Natural gas is moved by pipeline. Refined products and natural gas are similar, transported by various means to retail distribution points, such as gasoline stations. Retail or marketing, which ultimately markets in various ways the refined products, market refined products, natural gas liquids and natural gas to various consumers. So we did mention the segments of the petroleum industry. They are 4 segments, as mentioned. Here we need also to know some terms related to exploration and the production segments. The exploration and the production segment is sometimes called upstream operations, and the other 3 segments are downstream operations. The company which has one segment, which is exploration and production, is called upstream operations. And the company which include the other 3 segments are called downstream operations. Companies having both upstream and downstream operations are vertical integrated in the petroleum industry and hence are called integrated. So we can find that one company has both upstream and downstream operations, which is a vertical integrated in the petroleum industry and called integrated. Other companies involved in upstream only are referred to as independents. The several largest integrated petroleum companies are called majors. Other companies involved in upstream only are referred to as independents. And the several largest integrated petroleum companies are called majors companies. After we did mention some terminologies related to petroleum industry and the main segments of petroleum industry, we need to mention accounting principles for oil and gas producing activities. Accounting for oil and gas. U.S. companies, United States companies, American companies follow one of 2 methods of financial accounting for petroleum exploration and production activities. They are called successful efforts method and full cost method. Financial accounting for petroleum exploration and production activities provided two methods. The first method is called successful efforts method, and the second method is called full cost method. So, the oil and gas company need to follow one of these two methods. Firstly, the successful efforts method has only the cost of successful efforts only successful efforts capitalized as oil and gas property. Cost of exploratory, dry holes, geological and geophysical cost in general, delay rentals and other property carrying costs are expensed. So here we need to differentiate between capitalization and expenditures. Successful efforts only capitalized. On the other hand, cost of exploratory dry holes, geological and geophysical cost, delay rental and other property carrying costs are expenditures. Under the full cost method, all property acquisition, exploration, and development cost, even dry hole cost, are capitalized as oil and gas property. These costs represent fixed assets, amortization, depletion, depreciation on a country-by-country basis using a unit of production method based on volumes produced and remaining proved reserves. So, the full cost method, under this method, all property acquisition, exploration, and development costs, even dry hole costs, are capitalized. Here is an example. If a petroleum company drills 5 exploratory wells for 1 million each, and only one finds proved reserves, the successful efforts method recognizes a $1 million asset. $1 million asset. Whereas, on the other hand, the full cost method would recognize a $5 million asset. This example differentiates between the previous two methods, successful efforts method and full cost method. Under the successful efforts method, we will recognize a $1 million asset, whereas under the full cost method, we will recognize a $5 million asset. Types of cost. We have 4 types of costs: acquisition cost, exploration cost, development cost, and production cost. Acquisition costs refer cost incurred in acquiring the rights to drill for oil and gas. In acquiring, acquisition cost. Incurred in acquiring the rights to drill for oil and gas. Exploration cost refer to cost incurred in exploring the property, including drilling exploratory wells. Incurred in exploring the property, including drilling exploratory wells. Development cost refer to cost incurred to obtain access to proven reserve and to provide facilities for extracting, treating, gathering, and storing oil and gas. Lastly, production cost refer to costs incurred in lifting the oil and gas to the surface and in gathering, treating, and storing the oil and gas. Accounting for these costs. Costs incurred are either expensed or capitalized. Costs incurred are either expensed or capitalized. Expensed, charged, debited to an expense account, or capitalized, charged, debited to an asset account. Asset. Amounts capitalized will be expensed as period cost through depletion. Amortization, depreciation. So, amounts capitalized will be expensed as period cost through depletion. Successful efforts method. What are the main characteristics of the successful efforts method? FAS 19. An asset, this is a definition. This is a definition of an asset. An asset is an economic resource that is expected to provide future benefits to the company. Thus, exploration dry holes are expensed. Exploration successful wells are capitalized. The cost center for amortization is the property, field, or reservoir. Cost center for amortization is the property, field, or reservoir. Capitalized costs are transferred to expense through depletion. The main characteristics of the full cost method: exploratory dry holes are capitalized. Exploratory successful wells are capitalized. The cost center for amortization in the country. Capitalized costs are transferred to expense through depletion. Here is a comparison of successful efforts method and full cost method. SE is an abbreviation for successful effort method, and FC is an abbreviation of the full cost method. Items, successful efforts method, full cost method. Acquisition cost. C. Capitalized. Geological and geophysical cost, expense, capitalized. Exploratory dry hole, expense, capitalized. Exploratory well successful, capitalized. Developmental dry hole, capitalized. Developmental well successful, capitalized. Production cost, expensed. Depletion cost center, property, field, reservoir for the successful effort, and the country for the full cost method. Acquisition cost. Acquisition cost include costs incurred to purchase, lease, or otherwise acquire a property. They encompass lease bonuses, options to purchase or lease property, the portion of cost applicable to minerals when land and mineral rights are purchased in fee, broker's fees, recording fees, legal costs, and the other costs incurred in obtaining a property. So, acquisition cost incurred in obtaining a property. The costs are initially capitalized as unproved property acquisition cost. The term unproved property is a confusing convention used in FAS 19 to refer to unevaluated property. This means property not yet evaluated as to whether it has proved reserve. Upon evaluation of the property through exploration, drilling, or lapse of the lease, if no proved reserves are found, the acquisition costs are removed from the unproved property account to become cost of abandoned or worthless property. Exploration costs. The definition. What is the meaning of exploration cost? Are those costs incurred in identifying areas that may warrant examination, as well as examining specific areas that possibly contain oil and gas reserve, including drilling exploratory wells. Exploration cost may be incurred before the related property is acquired and after the property is acquired. May be incurred before and after. Exploration costs include costs of topographical or geophysical studies and salaries and other expenses of geologists, geophysical crew, and other person conducting these studies. Development costs are incurred to obtain access to proved reserve and to provide facilities for extracting, treating, gathering, and storing oil and gas. They include the cost of development wells to produce proved reserves, as well as cost of production facilities such as separators, treaters, heaters, and storage tanks. Production costs are the costs of activities that involve lifting oil and gas to the surface and gathering, treating, processing, and storage in the field. Hence, in a broad sense, production costs include all costs of acquisition, exploration, development, and production. So, production costs include all costs. All costs. We did mention acquisition, exploration, development, and production. However, for successful efforts and full cost accounting, the term production cost or lifting cost refers only to those costs incurred to operate and maintain wells, related equipment, and facilities that logically, by their nature, are expensed as incurred as part of the cost of oil and gas produced. Production costs include labor to operate the wells and facilities, repair and maintenance expense, materials and supplies consumed, insurance on property, and production